no Fed rate cut coming, the data is saying that interest rates are going to remain higher for longer. Right here, the 10-year Treasury yield leaps after June jobs figures are much better than forecasted. And if we take a look at the 10-year, we see it was dipping down, and right here towards the end, it goes back up. Right here. So it's dipping down and it goes back up. Same thing over here with the 30-year fix. We see it was coming down and now it dipped up. So same correlation with the 10-year. And I'll touch base on that again here and explain some of that. Also, watch to the end as I'm going to tell you how to time the market if you're a buyer so you can get the better deal. What is the interest rate not being cut potentially here? July 30th, that's when the Fed is going to potentially decide if they're going to cut or not cut the Fed rate. Well, that changes things as inventory is going to continue building up. Now, right here, if we take a look, the US economy added a stronger than expected 147,000 jobs in June, and the unemployment rate fell to 4.1%. Now, the one thing that I want you to keep in mind is the numbers that they give us, they don't really mean much, because remember last August of 2024, the labor market added 818,000 fewer jobs than the earlier reports. Here's what experts means, right? So I don't know, I read that last part, but the labor market added 818,000 fewer jobs than what they were telling us that the market was adding. So how do we know that this is true over here? And the ADP report, which is private payroll, that keeps coming below expectations. But the non-farm world payroll and the biggest employer is the government and healthcare. So what does this mean? Are there full-time jobs created? Anyway, we're not going to get into that, but how to time the market, because remember that I shared this article just a few days ago. Powell confirms that the Fed would have cut rates if it were not for tariffs. Now, that means that the Fed does not need much in order to hold rates steady. And if they don't cut July 30th, their next Fed rate cut meeting is in the middle of September. Now, sellers really need this relief. Because if we take a look at the inventory, it is a lot greater this year than last year. A lot more homes on the market for sale. And we see this purple blue line right there at the top. You see how many more homes are active right now than last year and the years past. And we see that that inventory still keeps ticking upwards for at least another couple of months potentially. And the fact that the sellers have not received the relief that they needed with the interest rates, this is going to prevent those new buyers coming in that would have if these interest rates were trending down towards 6%. So now we see a U-turn happening, and we know this U-turn is going to last for at least another couple of weeks. Well, that's just going to be eating into the summer selling season, and school year is just around the corner in August, which means if the Fed doesn't cut, even if they do cut rates in September, October, people move at a lower pace because school is back in session and people don't want to move during the school season. Some are just against it. Not everybody, but some are. And also the apartment complexes, they really push people to renew their leases because they don't want people terminating their leases in the winter months, because then it's hard for them to fill those vacancies. Now, we're seeing these interest rates U-turning. We're seeing this inventory. And I'm going to touch base on where you should be buying depending on what you're trying to accomplish this year and to get that best deal. And of course, if you're wanting to wait for the foreclosures, if you're wanting to see if that recession comes or if those foreclosures come, that's going to be sometime in 2026. As I've shown in previous videos, they just keep kicking the can down the road. Both administrations keep extending the foreclosure deadlines, the mitigation for FHA loans. So until that stops, until we actually get a free market in place, true capitalism back, or at least some capitalism in our marketplace, that's going to be hard to come by. But anyway, I want to touch base on that. So Powell confirms that they would have cut rates. And so what that has done is it was causing the 10-year and interest rates to come down. However, unemployment comes in lower than expected at 4.1% instead of 4.2%. They added 147,000 jobs, and then we're seeing that the 10-year is ticking up. Now the correlation, and I want to touch base on this again, the correlation with the 10-year is not what the Fed does today. It's what is the Fed going to be doing a year from today? Where's the Fed rate going to be a year from today, a year from July, so July 2026? And essentially, if the data is saying that the Fed is only going to do 1 cut or 2 cuts, that is going to actually cause the 10-year to remain higher. And if the Fed's going to do more rate cuts, that's going to cause the 10-year to come down because the 10-year is ahead of actually what the Fed does based on economic data. Now, the CME, I was going to pull that up, but anyway, the CME, what it does is it monitors what the Fed is going to do. And it was essentially that the July rate cut, the Fed was not going to do that. There was no way, no shape, way, form that was going to happen. Well, in July or in June, all of a sudden there was things coming out, as well as Jerome Powell stating that they would have cut rates. So things were saying, hey, there potentially is the rate cut at the end of July back on the table. However, that has now been diminishing itself, and that rate cut, so essentially Wall Street comes out and says there's an 80% chance, a 90% chance of a no, a 50% chance of a yes, a 90% chance of a, well, essentially now it's back to about 90% of a no. And then how are we going to time the market here? So right here, if you're in the short run, I've been saying you don't want to enter the housing market as a buyer until at least July. And of course, if this inventory keeps piling up, you're going to get better deals as you wait. Now, if you are wanting to get the house that's move-in ready, the house that doesn't need touch-ups, any house that has granite and quartz, you're going to want to enter the housing market July through September so that you have more of those move-in homes ready for you to move into. If you want the best deal, you're not worried about doing some work, you're not worried about painting or doing a full-out remodel, then you actually want to wait until September through November to get into the housing market, because then those deals and houses lingering on the market are going to continue. And we see that potentially inventory is going to keep increasing as we see it doesn't max out here until sometime in September or October, which means we should see inventory climbing at least a little bit more. And we're trending towards 14,000. So right now the data is really indicating that we will hit 14,000 probably sometime in July. Now, hitting 15,000, that's going to be a little bit harder as inventory is probably going to plateau. It's probably we're going to see more of the serious sellers coming to the market and the people that are saying, oh, if I can get this, I'll move, or I'll just wait until next year. And people are taking their houses off the market at a faster pace than last year slightly. But what that essentially means is when next year rolls around, that people are going to start putting these houses back on the market. When somebody takes their house off the market or it expires, the real estate agent didn't get a chance to get that property sold, that house is more likely to return at a higher percentage to the market, meaning when the next year comes around, that house is probably going to be back on the market for sale. Now, what you want to monitor is this 10-year. What is the 10-year Treasury doing? And what is it doing to the 30-year fixed mortgage? So if you're following these two, you're going to be able to stay ahead of things. And if you're following what's going on with inventory, which brings me to my next topic of make sure that you sign up for the emails that I put out. But before I go over that, smash that like button, smash that subscribe button. It'll help you stay up to date with the new videos that come forth, and it'll help me push this video so it gets in front of more people, as nobody else is providing this information. So click that like button, click that subscribe button. Let's get this video in front of more people. It'll help me with the algorithm here, with the YouTube algorithm. Now, right here, this active listings, as you're seeing that what's trending, I actually send an email, and the next one's coming out here on Wednesday after the 4th of July weekend, and it's going to show you the inventory discrepancy between this year and last year, how much more homes we have for sale, as well as broken up into different marketplaces. Of course, the greater Salt Lake area, we're going to have the Park City area, the St. George area, the Logan area. And so whatever you're looking at, make sure you sign up. That will be down below. It's going to be a link in the comments or in the description as well. So sign up. A bunch of people have signed up. They're staying up to date with the housing market of what inventory is doing. And when you're watching these videos and you get those emails, you're going to stay ahead of everybody else in the housing marketplace, because you're just going to have information nobody else has. So you're seeing this inventory building up. Quick recap here. That way we can recap this. Inventory continues building up. We see that that gap from last year and this year is still sustaining itself. And we see that some jobs have been added at a higher than expected rate. Unemployment has fallen, which has caused the 10-year to jump up. And then that has caused the 30-year mortgage to do a U-turn as well. And just remember that the labor market added 818,000 fewer jobs than earlier reported. And when this report came out in August of 2024, the 10-year dropped, interest rates dropped. Everybody was thinking recession, oh my gosh, what's going on? So it just shows you what the data that's telling us what's going to happen within the next half a year can actually do to interest rates. And what can we actually trust as far as their data, their numbers. So again, smash that like button, smash that subscribe button, sign up for that email. That's going to be the link down below in the description. And when you do need a realtor in Utah, Dinko the Realtor has your back. My contact information is down below in the description.